is 180 degrees different today than it was a year ago when Janet Yellen, it was roughly a year ago, Janet Yellen said, Bitcoin, environmental problems, illicit activity, money laundering, gambling, all of that. And you know, she just, door shut. And I remember I was asked at the time, and I basically said, she hasn't studied it. She hasn't studied the technology, and she hasn't studied the instrument, the new asset class. Well, it seems like she's been boning up because, again, just the other day, she focused on Bitcoin and crypto generally as, yeah, we need to make sure and encourage financial innovation. The US wants to lead, just as it has with many other innovation cycles. And I said to Yassine El-Mandra, our crypto analyst, I said, who's whispering in her ear? Because we began to hear other policymakers on both sides of the aisle talk in this way. And in talking to Michael Saylor earlier, he thinks it's Gary Gensler. Gary understands Bitcoin. He taught about it at MIT before he became chairman of the SEC, and he understands how profound this innovation is. First, global, private, meaning non-government, but it is open source, so public in that sense. Digital, rules-based monetary system ever. So it's a very big idea, and we do not want to be left behind. A lot of people heard on both sides of the aisle because it's becoming a bipartisan issue, which is astonishing after the divide we've been witnessing over the last 8 to 10 years. And it's also becoming a single issue voting. A lot of people are just going to vote on this issue, and that's it. So we're getting politicians and policymakers coming up to us who want to run for office, and they say, can you help us pull together a group of crypto-minded people? I want to learn how I can make their lives easier. That's pretty astonishing.
Really
this is how they're going to be voted into office.
Wow.
Block's singular focus on Bitcoin is critical here. This is how Bitcoin's going to proliferate around the world. And the second layer solution, which is the Lightning Network on top of the base layer, has been in test mode for years now. And, you know, one issue after another, but it seems as though the second layer solution has become more robust now and is ready for prime time. I think that was part of the announcement, direct deposit into the Lightning Network, taking away a lot of the friction in the user interface. So I think this could be big. Last year, Lightning, the number of channels on the Lightning Network almost tripled. I think a lot of that was El Salvador and maybe some of the other trouble spots around the world. This is going to bring the US, I think. I think the number of channels is going to explode, and my guess is the number of developers developing to this platform is also going to explode.
We also
assuming significant fee compression, both on the institutional and the retail side. So that's no surprise, it's baked into our model. What Coinbase for us is, it's a crypto asset play, and it's institutional and retail, so it could be a digital wallet. We're looking for who are the winners in the digital wallet space. Is it Cash App? Is it Coinbase? Is it Robinhood? And they're all in the running, and they're coming at it from different angles. And you've got the institutional side of crypto, and we believe that institutions, their go-to, the first, is Coinbase. It's the most robust platform, and it's got the most liquidity on it. And so we think the scaling opportunities, given what we think is going to happen to Bitcoin. Now, as you may know, Bitcoin today is around $44,000 per Bitcoin. We see that scaling to $1 million by 2030 or more. For all kinds of reasons, not just store of value, not just the payments what do you call those?
Cross-border payments?
Cross-border payments, but remittances.
Yeah.
Not just that. But institutional investors, insurance policies that high net worth individuals take out so that their wealth won't be confiscated, like we're seeing more and more often these days, and a substitute for money in emerging markets where they can't trust their monetary regimes or their fiscal regimes. So we see an incredible number of use cases, and we think Bitcoin will be leading the charge in many of them. We owned PayPal, very focused on Venmo, perhaps becoming the digital wallet. And it will be in the running. But I think the way Cash App is growing organically, as opposed to more of a top-down, let's get this thing moving, stretch. I think there's an organic movement. I think it's going to be is going to be fired up now by Bitcoin. Now, of course, Venmo is accommodating Bitcoin as well, but it's more of a follower of Cash App, and so we tend to put our bets with who we believe will be the winners. And as we were consolidating our portfolios during the last year, we've had a whole year to consolidate our portfolios during a risk-off period for innovation. Consolidating towards our highest conviction names, we made some choices, and we chose Block over PayPal. If you look at the activity within Bitcoin, you'll see the percentage of long-term holders is roughly 70%, so 13.5 million Bitcoin out of the 19 out there. So long-term, 70%. And that is very different behavior from what we're seeing in the equity markets. Bunch of high-frequency trading, short-term holders. They're doing timing, not time, and we think that's a mistake, long run. So I think when we move out of this period of downside volatility, we think the private market valuations are more correct than the public market valuations, and that there will be a closing of that gap in here. I think the time horizons will lengthen. That's what always happens in risk on. Now the time horizons have collapsed. So it's just an equity versus Bitcoin ethos right now. The first public asset manager to gain exposure to Bitcoin in 2015, when it was $250. I think today it's $44,000. And we think it's just begun. But I don't think most institutional investors are positioned the way they ultimately will be. A lot of retail has really led the charge here. They, like with our other funds, the retail investor, the individual investor, those people with one foot in the new world, they get what we do. They get Bitcoin. So I think institutions are coming along slowly. Most of our investor base has been retail, but we have been cultivating institutional relationships for the past 3 to 5 years. We do have institutional investors, but so we have two conversations. For the retail investor who's been with us, who really does believe that we're onto something, that innovation is going to disrupt every sector out there, and they want to be on the right side of change, we have educated them. We have a 5-year investment time horizon. Everything we do, keep your eye on the prize, average down if you can, and usually that sort of disciplined behavior will work out over time. We often say time, not timing. In fact, one of our clients in Japan, Mizuho Fuke-san, that's his words. Those are his words. Time, not timing. And we have a chart now. If you held stocks instead of trading around them over time, you would have done much better than trying to time.